Good morning, everybody. This is Patrick MontesDeOca with the early morning metals update for December the 10th, 2020. We're going to jump right into the gold market here, trading last at 1851.70, up $12.40. It looks like the market is trading around the daily average, the monthly average, and also above the weekly average. So this, although it does not identify a day trading signal, it does identify the trend momentum of the market. And with the market trading above the average prices daily, weekly, and monthly, we have entered into a triple trend, uptrend unfolding. The targets that we're looking at for the near term, for the day, is 1870 as the sell one level on the left of the chart. The weekly target on the right of the chart is 1874. These are the levels that we're using for today. The sell two level is 1898. And the weekly sell to level is 1906. So the first target that I'm looking at basically to accomplish is the 1870 to 1874. And that's pretty much the initial target that, as you can see, is almost matching the prices harmonically, almost at the same price. So we're looking at the first harmonic level at 1870 to 1874. The derivatives are sharply higher here, like Nugget. And I think we got potentially what I believe is confirmation that the low that we saw yesterday, or the lows that we saw into this area of 1824, could be the second higher low, confirming that the bottom pretty much was made at 1767, which was the previous low that we made around November the 30th. Excuse me. I stand corrected. It's 11:30. The low is 1767.20, and what I'm trying to define here is the low that we saw yesterday, potentially to be the higher low, confirming that the bottom was in, could not come down to 1822, which was the daily levels. The thing that I use here, for example, for myself to validate and verify the momentum of the market, is that when the market came down yesterday into this area of B2, even in fact below the B2, and we came right into the levels of support for the weekly, and the AI tells you that when the market comes down into this blue zone, and specifically or particularly when the price enters the combination of the daily and the weekly blue zones, you're beginning to identify where the highest probability is that you're going to identify buyers coming into the market. And the AI tells you that when you come down here, you meet your targets, it's accomplished. The targets, it's accomplished from the previous trend, which activated a short trigger from the 1900 levels, as you can see, going back to November the 9th. This was, once again, the announcement, I believe, of the pandemic, the vaccine, the efficacy being high, and I think unfolded about 3 different vaccines that are being used right now. So there is a light at the end of the tunnel in terms of the vaccines. But the one thing that I keep pointing out here is that the market is not trading on the vaccines. A lot of people have the perception that the gold market is trading on the vaccines, and the reality, as far as I am concerned, in the way that I'm trading it, is that the gold market is pretty much looking at the damage that was done because of the pandemic, because of the virus in the economic system. It broke the back of the system as we knew it before, and it pretty much just devastated the economy, the world economy, unemployment. We're still dealing with about 10 million plus people unemployed, even though the unemployment has come back quite a bit since the laws were made in March here. We haven't seen yet the effect of basically the second lockdown that we're dealing with right now, and also the economic impact that it's going to have on some of the small businesses that actually were able to stay through the first wave. But unfortunately, with the second lockdown now, the moms and pops businesses that were hanging on by a thread are no longer going to be there, and that's going to create another layer, an economic layer into the system, basically, that's putting a lot of pressure for the Federal Reserve to create money out of thin air, more stimulus. And it's inevitable. It's a necessity. It's a must that they put away the political differences and pretty much understand that there's there are a lot of people out there that are experiencing a lot of pain at this point in time economically, and particularly during this time of holidays. The sooner they act, I think the better this situation is going to be alleviated, not only in putting a dent on the continuous damage in the infrastructure economically, you might say, in the foundation economically, and also in the trust and faith of this system. It's a question of keeping the trust and the faith in the American system and the capitalistic system as it was basically established to be a democratic system. But there are a lot of issues that are being questioned right now, primarily because this crisis was not created by by Main Street. I think most of us, all of us, were a victim of this system collapsing. We're victims of this monetary system that has been implemented, not for the benefit of Main Street, not for the benefit of the average guy, not for the benefit of the middle class, when you really think about it, but to create actually an elite group of people that have taken advantage of this system, that are part of this cabal, really, that I believe it is, that created the Federal Reserve, that created the idea that, by creating a debt economic system, you're going to have tremendous economic growth and maintained the classes at an even keel, so to speak, in a balance of the class structure, so to speak. But what this created was the ability for the power to be the elites, central bankers, to be able to create fiat currency by eliminating the gold standard of the dollar, basically in 1971, by just lifting the gold standard of the dollar. And that really opened up the floodgates for this system to be flooded with debt. In looking back and looking at the amount of wealth, individual wealth, or the wealth gap, you might say, that it has formed because of this, is the biggest in the history of as far as I know, in my lifetime, in the history of the world, I think. And it's primarily being created by this debt economy that very few are in a position to borrow money. Very few are in an economic position even to maintain, a balanced budget or a balanced, pretty much, home economically. There are a lot of disparities that I think are coming due in terms of recalibrating themselves here, particularly as we see that the majority of these policies have not been for the benefit of mankind, for the benefit of men. We have we saw, a collapse in the economy, 23 million unemployed people. The reality is that we really don't know what the real damage has been. All of this data that is published here are, I believe, skewed by a wide margin of error. And the thing that I kind of fall into and fall back to, so to speak, in identifying the chatter, as I call it, and clearing the path, so to speak, to what the real market is doing, is the market. What is the market doing? How is the price of gold reacting to the situation? And in times of uncertainty, economically or with regards to the monetary system, the gold market basically is the what I believe tranquilizer or balancing factor, or the equilibrium of the monetary system. And throughout thousands of years, the gold has been God's money. Whenever fiat currency has collapsed, when the system has been abused by debt, which essentially, if you think about that, it erodes the purchasing power of the currency. If you continue to create debt, what you're going to have is, as we have seen, the US dollar collapse since 1971, about 98% or more against gold. And that's the effect of the purchasing power of the intrinsic value that we're looking at in terms of the US dollar as the world's reserve currency. And now that we are creating more supply in terms of US dollars, going back to that basic law of economics 101, which is supply and demand, I think if you think about the amount of money that's being printed, what kind of pressure is going to put on the US dollar in terms of its intrinsic value, purchasing power. Most of us are asleep to this silent killer called inflation. Most of us don't understand what inflation is. And I keep hearing commentaries when I publish by people that, oh, where's inflation? I don't see inflation. Oh, well, I'm not sure what world you're living in, but as far as I'm concerned, food prices are exploding. Grain prices, food prices, wholesale have gone up substantially. The soybeans, which is the leading indicator of inflation, or the pulse, you might say, of the price of foods, has increased by 50%. The difference is that the inflation that we are seeing, or that we were expecting based on traditional common wisdom, basically, has changed. The inflation didn't go to Main Street. It didn't create the velocity of money of people that would go out and spend money, in the economy. The money, going back to even 2008, that was issued, the QE that was issued, the stimulus that was issued, went to the banks to prep up their balance sheets and make sure that they have enough reserve capital so that they won't go into any kind of a credit crunch, any kind of a squeeze. And understanding the damage that was done then, they did not release those money. They did not release the money available for Main Street for people to invest, to buy homes or whatever. But it began a process, basically, of cutting interest rates. And if you take a look at interest rates since 2008, they've gone to zero almost. Simultaneously, they have quadrupled, meaning the Feds. When I say they, the Treasury, the Feds have quadrupled the balance sheet since 2008 at a staggering rate. And if we look at the tail end of that balance sheet, in the last year, it almost looks like a hockey stick. And that is the reason why interest rates had to come down to zero. Otherwise, how are they going to pay that loan? How are they going to pay that debt? How are they going to maintain that debt? Not at 4% interest rates, for sure. Where we're looking at the debt at $23, $24 trillion. So interest rates are going to be low for a very long time, is what I believe. The pressure is basically on the Feds that what are they going to do, or what measures will they take when interest rates begin to go up, or the economy begins to pick up and they are under pressure to control that growth by raising interest rates. I think one of the expectations that I have, and pretty much how I'm trading this market myself, I am on the long side. I have a core long position because I believe that the gold market hasn't yet priced in, or maybe if it has priced in by making the high that we saw back in September, August, September of 2089. It's basically defining whether this 2089 price in gold, which was a record level, priced in the damage that was done. So This consolidation that we've seen in the gold market basically has been a retracement down to about 50% of that move since March. And we've established a law of 1767 now as a completion of this. And it appears that the market is setting up to challenge those highs of 2089. What I'm looking for is the annual lows to be confirmed, to be established. Which I believe are the 1767 level that we made on 1130. I believe so far, based on the work, that unless this low is broken, these are going to be the annual lows. And what we're looking at now is the market retracing from this trend line resistance that you see. This is a Fibonacci trend line resistance that we incorporate into the codes. And the codes clearly define the trigger point that essentially identifies the direction of the market. So coming back to all those fundamentals that I just discussed, I take a look at the gold market. I take a look now at the technicals of the gold market, because those are the fundamentals that we're talking about. And that's the big picture. You know, that can be an intellectual discussion economically, but it's a fundamental interpretation of the market. Now, I got to make sure that the market tells me when to enter and when to exit. And as a trader, my whole idea is to come in and produce cash balances every day, make a few $100, if I can, a few thousand every day, and build the bottom line, which is to consistently increase my balances, regardless of what inventory we have. So I like what I'm seeing here in gold, that it reverted from that 1167 area. And I am, pretty much long. I have a covered long position. I have a synthetic long position. We covered a lot of shorts here yesterday. Recommended my private trading room basically to do that prior to the market opening. So we are headed in the right direction, I believe, from here, which is that corrections should be bought. We trade GDX, which is the ETF, the gold shares ETF. It's a 1-to-1 ETF, and the pattern is pretty much similar, to the actual gold market, obviously, but it uses different data criteria based on the price levels, you might say. And we can see also in each of this individual products, what the code is identifying. One of the discussions that I hear quite a bit on the internet right now, which kind of leads me to believe we have reached the top in the GBTC, which is the Bitcoin Grayscale Investment Trust, which we trade. And I made a comment here, and I'm getting a lot of questions about, gold against Bitcoin. And if you take a look at the video that I produced yesterday here, I made a comment basically that I don't believe that Bitcoin is a currency. It's a virtual asset, and to compare it to gold, which has been around for thousands of years, is a mistake. Gold is a precious metal that's been around for thousands of years, as opposed to a Bitcoin, who's been around only for about 10 years, approximately. So comparing Bitcoin to gold equally, I think, is a mistake. I mean, if you want to trade and take the risk and buy, a technology like Bitcoin, which is a virtual asset, it's up to you. I trade it, but I'm not replacing it with gold, because as far as I know, and as far as I can remember, even silver is considered money. It's negotiable. It's a tier 1 asset. And Bitcoin is not. You can't borrow by using Bitcoin against it, as you can with gold. You can use it as a collateral, and benefit by that. But that is a big distinction, I believe, that people fail to make, or want to make for some reason. And I think it's headed into potentially disaster. Same thing that whenever I look at the sentiment of the market, and everybody's talking about it, and it's all over the media, and so far Bitcoin has been all over the internet, the media, and it made a high at 24.12. And, I think we're going into a multi-month correction in Bitcoin. We've made a top, and we're on the way to finding the average price, you might say, or the mean. So we've made our money in Bitcoin, and we put it into gold, as opposed to what the majority of people seem to be doing, is that they're putting the money that they made in gold, or even getting out of gold and into Bitcoin, which I think is just a huge, huge mistake. You want to trade this instrument. It's a tradable instrument. And just like the gold market here, it's a question of booking profits in between. But in terms of replacing gold as a monetary unit, I doubt it. I really doubt it, because I believe what's going to happen here is that we're going to get the central bankers, or even our own government, to issue virtual currencies. I think it's pretty eminent that the central bank has in mind to issue some kind of a virtual currency. The question is whether that currency is going to be backed by gold. And grant you, I'll make you a bet that if they do move into the virtual currency world and create, they are going to regulate this so-called free market enterprise of Bitcoin that primarily is being used for money laundering. It's used in the black market. It's used to hide money. And this is exactly what I believe they will use in order to control the process of the supply of fiat currency, or the supply of basically your monetary unit that you use. By regulating Bitcoin, the government will be able to control just about every transaction electronically. And rest assured, I believe that we have regulation coming, big regulation coming, particularly if the government gets involved with it and they issue their own currency. They don't want any competition. So, I think it's a big risk to put it all in Bitcoin at this point. And so beware, it's got a lot of inherent risks that haven't yet been defined. Hacking, just a lot of technical issues that can unfold that will prevent you from having giving you access to your currency, your virtual currency. Coming back to the gold market here, we got a little bit of reversion back down from that 38.2% Fibonacci retracement, but we still are trading above the averages, so the price momentum is still unfolding. There's no trades here today, and I'm waiting, for basically the highest probability trades to unfold or to be identified. And for now, in terms of the gold market, pretty much that's what seems to be the case. Let's take a look at the TradeStation platform here and see what it's telling us for the other markets that we track. You're looking at Bitcoin at B1 level, or pretty close to the B1 level. So we're watching to see if we get some activation going from that level. I am looking to trade the market from the long side in Bitcoin. So it looks like we've come down to a good level of support, and I want to keep an eye and see what kind of support we might be finding here, because it's a great tradable instrument. It's got tremendous volatility. If you can manage that volatility intelligently, it provides with a lot of opportunity for short-term trading. It does look like we are getting a signal on GBTC. I'm going to pick up some Bitcoin here. Looks like the market is coming in with a buy signal here. You want to buy Bitcoin? You want to trade Bitcoin? You can go into Bitcoin here lightly and maybe begin to enter into a long side of the market here. We've pretty much been flat waiting for this little bit of a dip here. I'm buying Bitcoin here at the market. GBTC. I'm buying GBTC at the market. Now, this is a short-term trade that you can hold on to it. Obviously, if it begins to work for you, then you can begin to use a trailing stop. But I think the highs are going to be tested. So we're looking at about 5 points from here. Yeah, we picked up 3,000 shares for the time being of GBTC. This, by the way, this numbers that you're looking at here, they're not the correct numbers. They haven't been updated, so please do not use these numbers. We're looking at this. This is the TradeStation platform, basically, and these are the numbers that are more accurate, more updated currently. 1967 last, so it's already moving up here. We've activated a bit of a buy signal here on a GBTC, which is the Great Scale Bitcoin Trust. Due to the obviously gold market being neutral here, we like this trade, so we're moving into a little bit of money into trading a GBTC until such time that we get more clarification here in the gold market. For my subscribers in the private trading room, obviously you got this information. You want to buy GBTC. You want to get long GBTC. This is the Bitcoin Grayscale Investment Trust, which is regulated. It's an ETF that is regulated. So I choose to trade regulated instruments, basically, and everybody else can have their Bitcoin accounts. My interest is in monetizing out of the situation, not making a political statement. We're getting more buying coming into GBTC in 1980 last. It looks like this is the trade for the day that we've been looking for. $19.84 last. Fast market on. This is a real volatile market, even faster than the silver market. So it can definitely make a difference here. We're continuing to see money coming into this this trade here. I'm sorry here, but I got really busy here, and I am trading this. I am activating this live. This is a very, very fast market here. So use prudent measure when you are entering your size according to your profile. You know, don't overtrade, even though it's not a margin situation like the Bitcoin futures. It is a highly volatile. Um, it is a highly volatile instrument to trade. It's a tradable instrument to trade, not a currency. Although a lot of people would like to replace gold with Bitcoin, but I think we're talking about the gold market being the currency, you might say, for the physical market, for the old economy, and pretty much a Bitcoin or a virtual a currency that has to be created for the virtual economy that we're moving into. So we're going to be dealing with both instruments as a monetary unit. Fast market on grayscale, 1987.50 last. You can see the volatility is tremendous. And so myself as a trader, obviously by choice, you know, I do look for highly volatile instruments that I can apply the VC, which is the variable changing price momentum indicator, that identifies the extreme levels of the supply and demand of the instrument that I'm trading. And as you can see here, the market is coming off the of the B1 level. 20 traded. 2004. Yeah, with fast market on GBTC. So prepare for volatility. Let me adjust the numbers here and see if I can catch up with this chart and see where we are here. This is the chart that I pretty much use manually myself, even though we get the automation done, because I want to follow the energy of the market myself. And I want to really feel the change that's taken place. in the energy of the market. So this allows me to do that. I'm from the old school, so I mean, I come from the world where we used to do the charts by hand. So that's how far I'm dating myself. So this is pretty much once you build a certain way of conditioning yourself, it stays with you for the rest of your life. The 1945 was the buy one level that activated the signal here, as you can see. So if we concentrate just on the chart on the left, the numbers on the left, you see that the market came into this B1 level of 1945 and reverted from there. So looks like we got a fast market to the upside. Let me double check to see if this weekly numbers are correct. $25.31. Okay, let me update this. $25.31 is the sell 2 weekly level. 24.27 it comes in as the sell 2 level. The average is 23.07. So this is pretty much what I do when I decide to go driving, in the market. Then I look at my GPS, what it's telling me. I update the numbers, and then I see what the market is doing in relation to those numbers, and what the AI is pretty much identifying as trigger points. And particularly where the price is, whether it's in the extreme above or the extreme below the mean. This reversion in GBTC looks like it's putting in the completion of this correction here. So we see in that the market picked up the daily by trigger. The 2037 is the average daily price, and then it goes into the daily sell levels that matches pretty much the it begins to integrate the weekly numbers now of 2083. And so the market is engaging now the cycle, so to speak, the turning points, the reversions into the weekly signals to be more of a stronger signal. Now, depending upon, your size in here in trading these instruments, which are not margin instruments, it's a question of how you manage, your liquidation, or you apply it. When you buy in 3,000 shares, you can literally liquidate share by share if you want to sell it, as opposed to buy in one contract of Bitcoin or two contracts of Bitcoin, which not too many people can afford to do. The great scale Bitcoin investment trust, GBTC, offers a tremendous opportunity for retail traders, small traders, to be able to take advantage of this, of the virtual currency markets, or the Bitcoin markets. Once again, ladies and gentlemen, thank you for the privilege of your time. I'll talk to you next time. In the meantime, please be well. Take care of yourself. Take care of each other, and I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
The Ticker Talker app brings the powerful trading technology tools of the Ticker Talker desktop platform